Joining us for more on this is Max Wolff, Chief Economist with Manhattan Venture Partners. Max, let's first of all discuss this mishap. Twitter was supposed to announce earnings after the bell. NASDAQ's investor relations site, share.com, leaked that for just 45 seconds, but that was enough time for Celerity to get that and tweet. Why was it possible, or how did it happen that the NASDAQ leaked this out in the first place? What happened there?
So thanks for having me. It's a really series of snafus here. So we have folks out there who are all set up with all kinds of technology and all kinds of intention to take full advantage of any mistake that they can help happen or that organically happens. And what we saw is this little snippet of information, vital, exciting, important information about a disappointing quarter, came out in the worst way because really the window just opened for the blink of an eye, 45 seconds,
but
in the NASDAQ system.
How did that window open? How did NASDAQ slip up on that one?
It looks like they revealed the data, not thinking it was at risk, because there was a little bit of a data care handling issue, which in a normal circumstance wouldn't have really mattered, right? It's literally the you turn around for 1 second and it's gone scenario, and everyone kind of does it because you get a little bit sloppy. Obviously, they'll be a little less sloppy going forward, but it's sort of it could happen to anyone, although it shouldn't, and they are getting paid as an outsourced investor relations firm to sort of expressly not do this. But they had a moment they took their eye off the ball, and there's a lot of folks there to steal that ball.
Max, this is very bad news for NASDAQ. This has happened before. 6 months ago, NASDAQ accidentally published JP Morgan's earnings. Of course, we all remember the botched Facebook IPO. How bad is this for NASDAQ?
Well, so NASDAQ is also a technology leader, right? And people look to technology leaders to be perfect in these executions. In the real world, it's kind of tricky to be perfect all the time. On the other hand, it makes everybody nervous, and it is not good for brand NASDAQ 10 ways to Sunday. Not the first time. And literally, they're getting paid a lot of money by a lot of companies to handle those companies' financial results just to assure that nothing like this ever happens.
Not good for NASDAQ, certainly not good for Twitter. But good for Celerity, because it seems like they've emerged as the winners in this scenario. Everybody's talking about them now. This data mining, data scraping site that collects information, gives it to investors. Is this a regulation, a possible violation?
Yeah, so this is at very least riding the razor's edge. I think it's the informational equivalent of high-frequency trading.
Right.
And the reason these things are really bad is they make the average person out in the market, mom, pop, or even a small shop doing investments, feel like this game is stacked. I don't have the fastest server. I don't locate right near the exchange. I don't have data miners working for me. So it makes people feel like it's a sort of uneven playing field. And at very least, it's playing pretty fast and loose with the intention. I do think what they did is legal. I do think it's a valuable service. I do think it was good for them. By the way, this is also not their first rodeo.
Right.
So it isn't the first time they released data knowing that it wasn't necessarily what the company in question wanted.
So you think this is going to boost the likes of data miners like Celerity and have more investors thinking, hey, I better get this technology if I'm going to compete?
Yeah, absolutely. So it's a little bit an unintended consequence. It's not ideal, but there's lots of people out there wishing they had this service.
But there are no legal ramifications for anyone involved in this so far?
As far as I know, I'm not an attorney, and there's a possibility that there will be attempts for recourse. My guess is, because we saw this before and there wasn't last time, there won't be this time.
Do you think the shares would have tanked as drastically had they just released on time after the bell?
No. So look, these were not great earnings. They missed on revenue. They have to do a little bit of work already, Twitter, just to sort of restore faith. And I think fundamentally, Wall Street doesn't understand this company. They didn't before these earnings. They didn't before this leak, and they don't now. But it certainly didn't help.
But why were they received so badly? Profit beat estimates. Revenue jumped 74% year over year. That's nothing to scoff at. So were expectations just out of line?
Yeah, expectations were a little inflated. So was the valuation. Twitter was trading very rich, right? So the analogy I like is this is a $1,000 dinner. So everything has to be just perfect. And even if you're not supposed to eat the garnish, if you do, it better be fresh, right?
Was there anything in the report that would make you feel more optimistic going forward?
Yeah, so I like this company. I think this company has an enormous structural tailwind, which is I think they're good at targeting ads. I think people are on there. I think Twitter is the first draft of history. And I think people will learn how to use it. By people, I mean brands and advertisers. They're rolling out new products. They have three big problems. They need to make money all over the world. They need to make it easy for people to learn how to use it. And they need to make sure everyone understands how to make money with Twitter. They'll get there. The tailwind is huge, but it's going to be a tough ride.
So very quickly, you would use this down as an opportunity to get in?
If I was long-term minded, I absolutely would. This is overdone now.
All right. Thank you so much, Max Wolff, Chief Economist at Manhattan Venture Partners.